What is up, everybody? Good afternoon. Welcome to this All Star Options live event. I am Spencer Israel, the host of Stock Market TV. You may have seen me on the morning show, among other places, and I am so excited to host this event with Sean McLaughlin, the Chief Option Strategist at All Star Charts today. Sean, we have been planning this event for weeks, and we couldn't have timed it any better, could we have?
The market gods were listening, Spencer. I think that's what the deal is.
Yes, that's exactly what happened. So here's what's gonna go down today. We're gonna just briefly talk about what's been happening this year, what's worked for Sean, the overall market, what's been going on of late, and then we will run through different scenarios for next year. That's the whole point of this exercise, right? Is we know that the market is going to change. We don't know how, we don't know when, but we know it will. And the beauty of options and what Sean does is that he has a strategy or strategies, plural, more than one, for every different type of scenario. He's ready for it. He wants you to be ready for it. So let's get it down to it. Sean, are you ready?
I'm ready. Let's go.
All right. First things first, just for those who may not know who you are, give us a quick background. How did this whole thing come about with All Star Options?
Well, I've known JC for a long time. In fact, back 15 years ago when I was director of community at StockTwits, JC was one of the early people in our community who was really sharing great content. He had just launched his blog, and I got to know JC through that process, and I loved his research. I shared it all the time on social media, and I acted on it as a trader. I used his research to make many great trades. So I was a big fan of JC. And many years later, many years into our friendship, JC was trying to expand the scope of All Star Charts. And one of the things he said to me, he said, Sean, I've got a lot of customers who love my research, but they're always asking me how I can trade my ideas with options. And I understand options, but I don't speak options the way
Yeah.
you do. He said to me, can you help me build a product to help our customers trade options? And I said, absolutely, this is a great idea. Let's do it. And that was 2017. And here we are many years later, and it's going great.
So it's the combination of the All Star Charts research with the power of options, and it was a match made in options heaven. I guess that's the thing. It is a
Is that
thing
a
now.
thing?
I don't know. It's a thing now. So okay, real fast. Let's just set the stage for where we are right now. Obviously, unless you're live under a rock, you know it's been a really good year for most assets and most markets. Right? These numbers are not exact, but they're pretty close. Right? The S&P is up 23%. The Nasdaq is up 25% this year. Bitcoin has more than doubled. Gold made a new all-time high this year. It's been a pretty good year for the market. Now, we know that things change, and the last couple of days, maybe weeks even, have been a little bit wishy-washy. We'll talk about that. But by and large, things have been really good, really, dare I say, relatively easy, Sean, if you're a bull. This chart is actually about a week old right now, but it just shows the percentage of days this year where the S&P 500 made a new all-time high, almost 23% of the time. So it's been a pretty good year for the overall market. Now, we'll get to how things have changed in a little bit. But first, why don't you kind of walk us through a couple of your biggest wins that you had in this, what has been a bull market?
Happy to, Spencer. This is the kind of bull market where we all look like geniuses, right? You just put some money to work, and with so many stocks rising, it was kind of hard not to make money. But the people who made big money in 2024 are those who knew when to step on the gas, knew how to safely, correctly use leverage, and options provide a great vehicle for leveraging into our best trades and getting outsized wins. And those types of traders like me, did really well in 2024. So here, you got a chart up there that's Uber. This is one of our, we're going to show you the top 3 trades we had this year. And you'll notice one thing in common for all of them, and we'll get to that after the third slide. But we got into March or into Uber back in the end of last year. So the trade actually began in November of last year, and we bought simple long calls. We bought some March 60 calls. We paid $1.55 for them. And as you can see, with a couple exceptions, a couple pullbacks along the way, this stock absolutely broke out. And when we got into this trade, This trade popped up on All Star Charts research. That's how this trade got on my radar. And it's part of my process for every trade is to work with my consultant, work with my analysts and look at the research and look at the reports that we put out. And Uber surfaced on those reports. It was showing signs of a reversal. It was showing relative strength. And that was the impetus I needed to get into the trade. And boy, did it deliver. At the end of the day, this trade yielded us over 1,000% return in just over what, 4 months, 4 to 5 months. Those are the types of trades that we want to be in a raging bull market. So that's one example. Let's move on to the next one, Spencer.
Well, actually, and before we do that, what I love about this is Uber is actually, you may not realize this, Sean, Uber is down for the year. For 2024, Uber is negative. And yet here's one of your, if not your best trade of the year. You made 1,000% on a stock that went up for a little bit, but by and large has been flat all year, right? So
Hey, it's all about picking our spots, and that's what we do, right?
that's right.
Let's go to the next trade there. CM. We just got out of this one this week. Thankfully, we got out before what's happened over the last few days, although this stock has held in relatively well. But we got into this trade back in the summertime, early or midsummer. We bought long calls. CM was popping up on our scans. Our scans were revealing that at the time there was strength in regional banks. So we wanted a position in regional banks. And in particular, Canadian banks were offering what we felt some extra juice, right? If it was going to break out, we thought that there was the potential for some alpha to be generated here, outperforming all the other regional banks. So we kept it simple. We bought calls that had December expiration. We bought them for $1.05. And Spencer, we did a little maneuvering right before earnings a couple weeks ago. We rolled our calls to lock in some profits, but finally, when we got out earlier this week, we got out for net a 743% gain. I mean, these are the types of wins we want to have for sure.
I'm no expert, but that sounds good to me.
It's
That sounds
pretty good. It's pretty good.
Okay,
Yeah, and lastly,
I had never heard of CM before you put this trade on. I'd also never heard of APH before you put this trade on, or before it showed up in the research.
you are not alone. APH was a new company to me as well. Amphenol Corporation. They're in electrics. They do something with electricity. I'm not exactly sure. I don't really care, right? To me, stock symbols are just symbols and they're letters and numbers, and I just follow price. And this, again, thanks to All Star Charts research, this is how this stock got on my radar. And one thing to point out with all these positions that we traded where we got involved, all of these had very liquid options markets. There's certainly enough liquidity for us to do what we needed to do. So maybe you hadn't heard of APH. Maybe it's not a name you're absolutely familiar with, but rest assured, there's an active options market there and plenty of opportunity for us to get in and get positioned well. And once again, we just bought long calls. Now, you'll notice all three examples we're talking about here, these were all simple long call trades. Now, we have in our arsenal all kinds of trades, and we'll talk about those in a little bit. But this was the type of market that rewarded people who took positions that offered the potential for unlimited gains while also defining our risks. And in this case, we bought these July 60 calls back in February. We paid 80 cents for them. And this stock, with one pullback down to its 50-period moving average in middle of April around earnings season, that was really the only heat we took in this trade, although we were never down in the trade. We sold half along the way, as was our plan that we laid out when we put the trade on. And when we finally got out, we got out at a very wonderful time. That was options expiration day for our July options, as was our plan. We held that position as long as we could, as long as there was no reason to sell it. And we got out on expiration day. And our net result was 642% on our investment without taking really any heat in the trade. Again, these are the types of trades we love to do.
I think the biggest takeaway here is you have a system, you have a process, you stick to that process, and it works for you. Right? Simple trades for what has been a simple bull market, right?
Correct.
But of course, we know that markets change all the time. We know this why? Because history and the research tells us that markets change all the time. I have a few charts I want to share from actually this morning, just to kind of put the past couple of days or weeks into context here. The number of stocks that are going down or making new lows is increasing, right? This is not an opinion. This is a fact. There has been more stocks in the S&P 500 that are down than stocks that are up for the last like 2 weeks in a row, right? So what does that mean? Well, we don't really know, right? But it means at the very least our ears are perked up, right? And we're kind of looking around and we're saying, okay, next year might not be like this year. We have to prepare. So that being said, Sean, um, let's go into one scenario. It may not be the scenario that you think is most likely, but it could happen, and that is a sideways choppy market. In this kind of a market, what kind of stocks are you looking to trade?
So, as you were saying, yes, I have an opinion of what the market's going to do in 2025. I'm also prepared to be wrong. You have to be prepared to be wrong. You have to be open to other possibilities. And so, one of those possibilities is we could be entering a period of time where the market just goes sideways, right? Doesn't really have any breakouts, meaningful breakouts to the upside, doesn't really scare anybody out on the downside. There's support and there's resistance, and the market just kind of goes sideways, corrects through time. You've probably heard that phrase before. Well, that's okay. Bulls and bears find those types of markets very frustrating. If you're very bullish, you're not making any money. And if you're bearish, you're not making money either. Everyone throws their hands up in the air. But you know what? Options traders like me, we love markets like this. There are opportunities for us to make money. We just got to find the stocks that are stuck in ranges or the ETFs that are stuck in ranges, and we have option strategies to take advantage of that. So let's walk through one of those strategies real quick.
Yeah. So exactly. So what kind of a trade and a strategy are we putting on here?
So I don't want to get people lost in the weeds of these strategies, and we'll have another session later on where we could talk about
Yep.
get really into the nitty gritty. But one common scenario or one common trade that options traders will employ, and I certainly employ in sideways markets, is to collect options premium. Get paid upfront for your trades, and these trades are trades that are bets on the market not going anywhere. The market's going to stay in a range. And as long as the market or the stock or the ETF, whatever we're talking about, as long as it stays in that range, we get to close that spread at a price cheaper than what we sold it for, collecting the difference, booking the profit. And we could do these types of trades over and over again. There are certain steps we need to go through to identify them, but these are trades that have high probability of success in a sideways market.
Oh, there's a good comment from Rich in the chat, which is you can still make money in this sideways market. You just need patience. That's exactly right. And by the way, if you have questions in the chat, keep them coming. We will address them at the end here. Okay. So let's go into a little bit more detail here. We don't want to get lost in the weeds too much, but we've got a sideways market. We're getting chopped up. Give us a sort of a hypothetical example of a trade.
All right. So one thing I'm going to do is I'm going to look into All-Star Charts research, and I'm going to look for the stocks or the sectors or the ETFs that are stuck in ranges. I'm looking for something that's in a 1 to 3 to 6 month range where there's a clearly defined level of support and a clearly defined level of resistance that would be it would be a loud signal to me that if the stock or ETF traded outside of those ranges, that the range is now over. I want to find those clear levels. So once I find those, leveraging All-Star Charts research, then I pick my time frame. How long do I need for this trade to play out? Generally speaking, when I'm selling premium and getting and betting on sideways movements, I'm just looking to be in the trade for just a few weeks, right? Maybe 3 to 4 weeks tops. So I'm looking at options expirations that have 4 to 6 weeks of expiration, no big deal. And then I want to select my strikes. I want to sell premium. I want to sell a call and I want to sell a put at strike prices that are outside of the range because I don't believe that the stock's going to even get to those levels. So I want to sell those options because if those prices never get hit, those options expire away worthless. Those are the types of trades we want to get in because we sold them first, collected the money, and then buying back cheaper or maybe not even buying back at all because they expire worthless. And then, of
Uh,
course, the last step in determining or putting the trade on is we have to size the position properly. And this is true for all trades, Spencer, not just for trades we're doing in a sideways market. We have to size the trade and define our risk in such a way that we're not risking more than, for me, 1 to 2% of my portfolio. If I'm dead wrong and I take the maximum loss on my trade, I only want the impact to my portfolio to be 1 to 2% max. That's what keeps me in the game long term, Spencer.
So Eric asked, how do you determine how far out to go? This kind of answers that. You let the market tell you.
Well, no, with a sideways market, when we're putting on short premium trades, we definitely want to be positioning no more than about 6 weeks out to expiration. Why? Because once you get inside of 6 weeks, and particularly once you get inside 4 weeks until expiration, that's when the value of the options decays away fastest. These are decaying assets. All else being equal, if a stock goes nowhere, the value of those calls and puts will decline at an ever increasing rate as we get closer to expiration. So we don't want to be putting these trades on with a year to expiration. That's too long.
Well, here's an example of that trade. This is a P&L chart. If you've never seen it before, Sean, can you just kind of briefly go over this and kind of what it's saying?
Yeah, we'll explain all these things later on and down the road, but just high level here. There's a P&L graph here, and it shows you that with a delta neutral type trade that we're going to put on here. Sorry for the scary words, but basically it shows that we profit as long as this underlying stock that's currently trading at $100, as long as it stays between, let's say, $93 on the downside and $107 on the upside, we have the potential to earn money, and we manage risk if it gets outside of those levels, and we close the trade down. That's it.
All right, so that's one scenario, right? One strategy for one scenario, a sideways choppy market. Let's move on to
Right.
another scenario, right? And that is maybe we get a bear market or a correction or some combination thereof, right? Where prices are going down more often than they're going up. In this kind of a market, tell us about what stocks you're trying to trade.
So in a bear market, I want to be getting positioned short, or I want to have a directional lean towards the downside in stocks that are leaders to the downside, right? Stocks that are already showing relative weakness relative to their peers, relative to the market. I want to be getting short stocks in that type of in that type of environment. And in a bear market, one thing that happens in bear markets, if you haven't lived through one yet, is that people get incredibly fearful. And when people get fearful, they throw caution to the wind and they'll pay any price to manage their risk. Well, as options traders, we use that to our advantage. When option prices get incredibly expensive because people are paying more money to hedge their risks, or they're paying more money to participate speculatively on the downside, they are bidding up the prices of options, particularly put options. So we like to use that to our advantage and craft trades that increase our odds of success thanks to the fear that's in the market providing our opportunities.
So you're looking for the worst offenders, the biggest losers, right?
Generally speaking, yes, we want to be in the stocks that are showing the most weakness relative to their peers, because those stocks, just like leaders on the upside, right? That the best stocks always lead. Everyone's heard of the Mag 7, right? The Mag 7 always leads the way up. Well, conversely, on the downside, it's the weakest stocks, the stocks that have been doing terrible. Trends tend to continue, right? And so the stocks that have already showed their hand and are already going down, more often than not, they're going to keep leading the way. In fact, maybe even accelerate in a true bear market.
All right, what walk us through like the ideal trade? If you have your pool, your pond that you're fishing in, walk us through a trade that works.
Well, certainly there are lots of different trades that we can use, but one trade that I tend to use the most in a bear market is a trade where I buy a put, which benefits from prices going down, but I sell a further out of the money put that's highly priced. We want to sell expensive options. We sell those highly priced out of the money puts to help finance the purchase of the put that I want to be long. This is called a bear put spread. Again, don't worry about the language being used here, but we are leveraging people's fear for us to get positioned at affordable prices. And the nice thing about trades like this is if you do it right, like I do it, you can risk $1 and have the potential to make as much as four. Now, I don't know about you, Spencer, but when I win $4 with risking only one, those are the types of trades I want to do all day long.
Yeah, that's generally a good strategy. So,
Now let's be clear here.
yep.
We're talking about bear markets. We're talking about sideways markets. These are certainly possibilities, right? We're seeing some crazy stuff. I mean, even just in the last 2 days, you'd be right to think, oh man, should I be worried about a bear market or should I be worried about a sideways market? Yeah, those are real possibilities. I think they have a less chance of what is really going to happen, but we do need to be prepared for them. And that's why we have strategies that take advantage of these scenarios just in case.
and the system is pretty much the same. The only difference is you're trying to identify a target on the downside as opposed to a range.
Right. Look, every trade that I put on, Spencer, more or less follows the same process. It starts with All Star Charts research, right? All Star Charts research is the best resource that I have available to me that surfaces the best stocks and the best setups and the best sectors. Okay. That's where it starts. Once I have found that, then I determine, all right, where can this trade go? Does it have a price target? Or how much time do I think I need for this trade to play out? And that helps me determine the expiration series that I'm trading in, the strike prices, and then the last piece and the most important piece, I think, is determining my position size, because the position sizing is so underrated for a lot of new traders. It's very tempting to want to size big in an idea that you're very excited about. You're very jazzed. You think this is the one. This stock is a sure win. I'm going to go in 10x my normal size. Yeah, you could do that. And if it works for you, great. But I've been trading for 26 years, Spencer, and I've been around a lot of traders. And I can tell you, for all the traders I know who've been in this game a long time, who've survived, every one of them pays very specific attention to the size of their trades, and they don't want to risk more than 1 or 2% of their portfolio on any position. I'm no different. That's why I've been in this game for 26 years.
That's why that was the words right out of my mouth. That's why you've been in this game for as long as you have, right?
That's right.
Here's an example of that trade or that kind of trade on a P&L chart. Can you just walk us
Yeah,
through it real fast?
this is what's called a P&L graph, a profit and loss graph. Along the x-axis shows you the range of prices of the instrument, and in this example, we're getting into a position where the stock is just around $100 a share, and we're buying the 100 put, which is the put we want to own, but we're selling the 90 put because there's a lot of it's priced really high. There's a lot of fear in the market. People are bidding up the price of that put. So we're going to sell it to lower our cost of owning that 100 put. Now you'll notice at the far right of the chart, you can see where our risk is defined. The most we can lose is what we paid for the trade. But you'll also see on the left side of the chart, our upside is capped. But I'm okay with that, because here's the thing about bear markets. Markets in bear market, they go down fast, right? But they also bounce really fast. And so it's really tough to put on a bear market position and just hope to ride it all the way to zero. That rarely happens. So I'm not so concerned about getting unlimited upside to the downside, or unlimited gains, I'm sorry, on the downside, because they so rarely play out. It's very sexy when people do. I mean, everyone's familiar with the Big Short and people shorting the mortgage market, right? Those are very sexy stories, but the reality is they don't plan out. They don't pan out as often as you might think.
Bear market rallies can be extremely vicious.
Absolutely. So
So okay,
let's move on to what we really think is going to happen, Spencer.
yes. So the market can really only do one of three things. They can go up, it can go down, or it can go sideways. We know most likely market's going to go higher. That's usually what happens, right? We know that because asset prices trend. We know this from reading All Star Charts research. Bull markets tend to beget more bull markets, right? So if you just to put this all into context, if you look at the length of the current bull market we are in, if it ended tomorrow, this would actually be one of the worst bull markets ever in terms of performance and in terms of age, right? The reality is we're young. We're in a relatively new bull market here, so it makes sense then for you, Sean, that the bull market would naturally continue, but it won't continue in the same way, right?
Right. The market we've been in, and we talked about it a little bit at the top. It's been one of those markets where you can almost just buy anything and everything went up. And you could have kept your strategy simple, and just being in the game, just participating was good enough to make gains. And that's fine. If that's what you did, great. Congratulations. You probably had a really good year. However, what we think is setting up, and we've been talking about this all week, even before what happened yesterday with the FOMC. We've been talking all week about there are some signs, popping up in the wings about things that are potentially becoming headwinds. We were talking about the U.S. dollar potentially breaking out of a range. We were talking about semiconductors really not showing leadership right now, and we really need the semiconductors to be the leader to bring the market higher. There were a number of things that were raising our eyebrows that look, the bull market may not be over, but it's probably not going to be a, just buy anything type of market and ride it. We're going to need better strategies and we're going to need patience. And so with that in mind, going into 2025, I want to be focused on the strongest stocks in the strongest sectors. And I want to put trades on that take time to develop and pay me to wait. Those are the types of trades I'll be primarily looking at in the early going in 2025.
So maybe you're not looking for to go back to Uber, right? Or Canadian Imperial Bank of Commerce, right? Or the big winners you had from this year. You're looking for the leaders of their groups, like names like Apple or Walmart, right? Or Caterpillar, big names that we know.
Absolutely. And you know what, Spencer? The nice thing about the trades I'll be looking to put on is that, yeah, they'll position me to take advantage of a slowly moving bull market and I'll get paid to wait. But there's also still the possibility that I could convert that trade or that trade could morph into a trade that has the potential for unlimited upside. So it can turn into one of those Uber trades. Not saying it will, but at least we put ourselves in a position to win and a position to get, to have those wins if we need to. But the reality is, in my mind, the bull market continues. It's not going to be straight up, of course. There's going to be hiccups along the way, like we were seeing in the last 2 days. But generally speaking, we're going to move higher, but we're going to have to be patient.
All right. Once again, for you, it's the same process, right? As far as identifying a target, the expiration, the strikes, position size, that's all the same. Can you walk us through one of these trades?
So the trades that I have my eye on that I think are going to perform very well in 2025, certainly in the beginning of 2025, is trades that you get long, right? They benefit from upward movement, but if it takes its time, you get paid. And it involves buying a call and also selling a call. So you buy a call that has, maybe 6 months to expiration, and you sell a call that maybe only has 1 or 2 months of expiration, with the goal being that that short call that you sold for whatever you sold it for expires worthless. You keep all that premium, and now you're an owner of that long stock that has a few more months of expiration at a discount. And the best thing about these types of trades is you can win two ways. If the stock or the ETF that you purchased, if it moves up quickly, quicker than you thought it would, well, it's a good problem to have. It's a first class problem to have, but we'll get out of the trade when the stock trades up to our strike price, and we'll earn a profit. The amount of profit depends on how soon we have or how much time we have left until the short option expires. So every option has an expiration date, right? If I sold a monthly January option, that expires on the third Thursday of January. So if I'm in a position and it goes my way and the stock closes on expiration day of January 17th, if it closes, let's say, just shy of my strike price, that's the best case scenario. That short option expires worthless. I keep all that premium that I sold, and I'm still long the longer call that has perhaps a few more months to expiration. So there's multiple ways to win in these types of trades. And I hate throwing out scary words. These are called calendar spreads, and we'll explain all of these details to you guys later on. But these are trades that are very useful, and they're very adaptable to changing market conditions like we will have, which I expect to have in 2025.
How does the velocity of the move affect this trade?
So if a move happens quickly, that's not the ideal scenario. We can still profit. We can still profit. It's just if I put the trade on and it's got the short option has 6 weeks of expiration, but the stock goes there tomorrow, I'm not going to make a whole lot of money. I will make some money, but I won't make a whole lot of money. But hey, like I said before, it's a first class problem. I'm never going to complain about having profits, right? It just won't happen as much. But if it took its time and it inched up every day or every week and it just kind of got close to our strike price, but not all the way there, that's where we earn the maximum gains on the trade.
All right. All right. So three different scenarios. We have an ideal trade for each of those scenarios, and this is basically the value in a nutshell, right? Of you, Sean, and of All Star Options, right? I mean, the fact is you're always prepared, right, for any kind of market. I know you made what, close to 100 trades uh so far this year. Maybe you'll make more in the next week and a
Yeah,
half.
we're going through the portfolio review process now. It's the end of the year, right? I mean, we'll only have a few more trades that are going to close before the end of the year. And we tallied the numbers, and we did 98 trades in 2024. And basically, it works out that if you invested $1,000 in every trade that we did, winners and losers included, if you did $1,000 invested in every trade, then you would have earned approximately $290 for every 1,000 invested. That includes the losing trades. And in fact, you know, the way it works, our losing trades outnumber our winning trades, but the magnitude of the winning trades is what matters, and that's what we're here for. And I'm doing a little back of the envelope math, Spencer, but if you did 100 trades and you invested $1,000 in each of them, you probably made around $29,000. And I think that's about 15 times the cost of an annual membership to All-Star Options.
That's right. That's exactly what David in the chat just said. Someone asked about the success rate. It's not really about that, right? It's about the magnitude of the winners compared to the magnitude of the losers. And
Yeah,
Sean
David,
talked about,
I'll tell you right up. We won on approximately 30% of our trades. And that's okay when you have a process that earns big gains, like those three examples we showed earlier in Uber and CM and Amphenol. When you have big wins like that, that pays for a lot of small losers, and small losers is the name of the game. Anyone will tell you who's been in this game a long time. If you're suffering anything other than small losers, you're probably struggling. So we keep our losers small. We have defined risk in most of the trades we put on. So we already know our max loss, and that max loss is a completely acceptable number. But we're not focused on win rate here, because we know that when we get a trade right and it goes our way, the gains are going to take care of themselves. And that's certainly happened in 2024. And it has happened every year since we launched the service back in 2018.
let's talk for a moment about the power of community that you've built. You've really fostered this community from the ground up. Here's just an example of a
This might be
screenshot
my favorite
of the
part of
chat.
All-Star Options,
Yeah.
Spencer.
Well,
We
why? Why is
launched
it?
we launched the live chat room. That we didn't have the live chat room from day one when we started back in 2018, but a couple years into it, we launched a chat room because everybody wanted to engage. Everybody wanted to share ideas. So now we have this community of members who are part of the part of All-Star Options, where they have access to me throughout the trading day. They can ask me questions. They could ask me questions publicly and we could all learn from it, or they could ask me privately and I could engage with you there. And this community, it's getting better every month, Spencer, but we have people in there, really smart traders who are sharing ideas of their own, and other traders are engaging with those trades. Not just me. I'm not the only genius in the room, Spencer. There's a lot of really smart people in there. Also, we have a lot of people who are new to options trading, and they have questions, and it's not just me that gives them great answers. It's other people in the community who help out too. It's a very supportive community, and they're in there all day long. They're chatting on the weekends. They're having Friday night strategy sessions. I mean, it's great. And I think for me, that's the best part of being involved in All-Star Options, because it's not just me and it's not just you. There's us, and we're in it together.
Yeah, trading can be a lonely, isolating experience, right? It's
Absolutely.
you and it's your screens, and maybe you don't get outside much, but this sort of negates all that.
Absolutely. Absolutely.
All right, so here is what you get when you join up with Sean on All Star Options. You get an average of about 3 options trades per week. It's not always exactly that, but it's about what it comes out to. Um, you get direct access to that chat room that Sean just talked about. That's he said it. It's his favorite part of All Star Options. You get a weekly review, actually every Thursday. Sean just kind of did it before this, where he kind of reviews all of his open positions, what he's thinking, how he's going to manage them, and kind of talks through the thought process there. And then you also get Sean's Options Execution Lab, which is just a more thorough video series about executing options and that whole process. And also, I heard, Sean, there is a brand new thing you're doing. Is this true?
Yeah, we're going to do a 4-week mastermind starting in January, where we are going to do deep dives on some of the more common strategies that we execute. Because if you look at that slide, if you look at the weeks there, There might be some scary words in there. Things like strangles and calendar spreads and vertical spreads and risk reversals. These, I mean, if you've never heard these words before, that could be intimidating. Well, I promise you, at the end of these 4 weeks, not only will those words not scare you, they will excite you and you will understand how they work, when to use them, and how to manage them.
So this is a brand new thing that you're doing. You've never done this before. You've never actually done a video series and gone deep on specific strategies. Like we kind of talked today a little bit about a few of them, but we did it very high level. This is going to be a lot more detailed, right?
Absolutely. I mean, these are strategies that we employ frequently. We talk about them in our weekly review sessions from time to time, but this will be a deep dive where we will examine when we put these trades on, what are the best ideal situations to put these trades on, and once they're in, how do we manage them? These are all very important steps to these trades.
So this is going to start in January. This is a brand new thing Sean is doing. We were talking about doing this for a while. We thought, do we charge extra for it? What do we do? No, we just said to just give it to All Star Options members.
JC wanted to charge money for it.
Yeah, and we said no. Let's just give it to them for free. So if you are an All Star Options member, you get all of this stuff and the 4-week mastermind comes with the package. So there it is. You can get it quarterly. You get annual. As always, 30-day risk-free guarantee. Try the service. You don't like it out. You don't like it. No harm, no foul. We part as friends, right? But so that's where we're at. Give us a call. Numbers on the screen. Scroll down for more information. And Sean, any final thoughts?
Listen, we need to be prepared. 2025 is coming, and the market's probably going to change. We need to have strategies that will navigate this new environment, but we also need to be prepared to be wrong, right? We need to have an arsenal of trading strategies at our ready that we're comfortable with, that we could deploy at a moment's notice in case the market has other ideas, right? We've been here before. We've all made guesses. We've all made predictions of what the market's going to do, but how many times do we get that right? I think the bull market has matured or is maturing, and we can still benefit from bullish trades. We just have to tweak our strategies. We can't just, buy anything. We can't just buy simple calls and ride those waves. Certainly those trades will happen and they will work, but we have to have more tools. We need to have more flexibility, and that's the market I see coming. But like I said, I'm prepared for plan B and I'm prepared for plan C if we get there.
All right, before we go, I know there are some questions in the chat. Let's get to a couple of these right now.
Let's hear them.
I promised I would. Josh asked, what level options trader do you need to be to execute the type of trades we're talking about?
That's a very good question. So what he's referring to is when you have a brokerage account, when you open up a brokerage account to trade options, they have different levels of access. You could the level 1, I believe, is just selling covered calls. So selling calls against stock you own. And then there's a variety of levels. You're going to want level 4, I believe is what it's called. That's the, anything goes. I can do any option strategy under the sun. It's not hard to get that. You just need to ask for it. And many brokerages may ask you to answer a bunch of small questions, like a little quiz to make sure that, you understand the lingo, so to speak. It's not scary. And by the way, after you hang out with me for a few weeks, you'll understand all the terms and you'll be able to handle it no problem. But it's really, in most cases, you just got to ask for it. So if you don't have the ability to trade every option strategy under the sun with your brokerage, just hit their customer service, say, hey, I need full access, and they'll give you the steps to do that. And it should be pretty painless.
Sean, how do you know if a stock's option premium is too expensive? This is a bit of a can of worms.
That's a great question. So I look at the implied volatility of an option, and again, this is probably more conversation for later on when we get into the mastermind. But since you asked, implied volatility is a measure of the premium in the options. Now, if you look at a implied volatility chart that you could find on any charting platform that offers it, it'll have a number. The implied volatility will be 0.37 or 0.99 or whatever. The number doesn't matter to me. What matters is, where is implied volatility, that score, where is it now compared to where it's been? Is it in the upper end of the range for the year? Is it in the lower end of the range for the year? It's a relative term. So I'm paying attention to the relative values of implied volatility.
And then There's a couple more here. Let me see if I can find it. Oh yeah, right. In a last one in a bear market, are you looking at alpha and beta, or is your process different? I mean, we kind of went through that. It's kind of the same process, right?
Yeah, I'm not exactly sure what he's asking. Beta measures, how a stock tends to perform relative to the market. Um, I mean, I guess we're finding high beta names, but not deliberately. We're finding them because All Star Charts research is surfacing stocks that are the leaders of their sectors or leaders of their industries. So by definition, that gives them high beta, right? They're outperforming their peers. So yeah, generally speaking, we're in high beta stocks for sure.
All right. Um, I think that's it. I'm just answering a question in the chat right now about the chat, ironically. So Sean, I know you are busy on Thursdays, so I appreciate you taking the time. Once again, guys, All Star options trades from Sean every single week, but it's not just about the trades. It's about the plan for those trades. It's about the community you get with all of that. And of course, you get the execution lab and the mastermind. So check it out for the quarter, for the year. I promise you will not regret this. To Sean's point, you have to be prepared. It's the bottom line. If you're not prepared for a change, then what are you even doing here? What are any of us even doing here, right? That's the name of the game, is be prepared. Sean does
Absolutely.
it.
And Spencer, sorry to interrupt, but
Yeah.
we kind of glanced over it, but we should point out that every trade that we publish in All Star Options, every single trade comes with a detailed plan.
Yep.
We tell you what about the setup that we like, what option strategy we're going to use to express our thesis, how we're going to manage that trade, where we're going to stop out if we're wrong, where we're going to take profits if we're taking profits at all, and how we may or may not position size in certain ways. All of those details, every single detail that you need from day one of that trade will be published in a research piece for that trade so that you could go back and review it at any time. Once you put the trade on, you have the whole battle plan right there. You're for most situations. Obviously, sometimes some weird happens, but when that happens, that's what the All-Star Options chat room is for. That's where we talk about stuff happening in real time, and then we review everything every week in the weekly options jam session. But I'm telling you, the detailed trade plan, it's been a game changer for me. In fact, JC and I talk about this in the past. Before I started working with JC, I did all these trades myself, but I just kind of did them in my head, right? I just kind of managed things as things were going. But building this product with JC forced me to put pen to paper, so to speak, and write out these plans and have the detailed plan. And I'll tell you what, it's been an absolute game changer for me in my trading.
What's the saying? Plan your trade, trade your plan.
That's right. That's
How it
right.
goes. All right. All right, Sean, I appreciate the time as always. Chat, I appreciate the questions as always. And thanks for watching. And All Star Options, where it's at. See you guys.
See ya.